other ones to follow, and that's seems to be the case. Now, the markets are taking a little bit of a breather today, but that's off record highs. The markets are confident that the president and his team are going to work it out, even if it goes past August 1st. It doesn't seem like it's a huge issue at this particular moment.
Yeah, look, when markets freaked out 3 months ago, that was a huge cause for concern, both personally for me and obviously for everyone else. But from a trade standpoint, you knew we were going to win any of these. And it's so easy for the U.S. with its purchasing power and kind of with the steel resolve of Trump, where, look, maximum chaos creates maximum leverage. And like that chaos was not enjoyable. But if you're unwilling to take the pain, okay, how can you force these other partners into negotiating leverage? So with the way things were set up to where we're going, it was never a big ask to dramatically improve the status for trade for the United States, and we are already there. And if you combine it with these capital investments coming in our country, okay, the deregulation, this tax bill getting passed with the immediate depreciation, and the fact that our industrial base was so low as a percentage of our economy, look, the best days are way in front of us. I could not be more bullish about the economy in the U.S., and like, you're just going to keep getting more of these trade headlines.
Yeah, and Brian, 15%, that's in the range. Massive moves this week. Mike?
Yeah, so anytime a stock gets shorted, right, and people are betting against it, there's inherent leverage in that. Sometimes there's a great degree of leverage in those trades beyond what a normal short selling trade would be. And so people, like, this is public information, so it's easy to figure out what the short interest is in a stock and to bet against it by using options, which also creates a great deal of leverage going the other way, creating these short squeezes. So the first original meme, I think, was GameStop. That's your meme stock. And so if you look at this most shorted basket tracked by Goldman Sachs, it's easy to hammer these companies because all these trades get crowded. So the same way, if everybody's buying a stock and bad news happens, everybody needs to get out. So when Wall Street's betting for these companies to go under, it's not just retail pushing these stocks higher. They do pick up on this on Reddit, Wall Street Bets. But I absolutely love to see these short squeezes happening.
Okay.
And so these meme stocks may look something like retail euphoria, but what these banks that talk about it are, they don't want to say that their smart money clients are getting their rear ends handed to them. And so I just love to see it.
Does this play into bubble logic?
You don't think that the
it's good gum.
The record highs in stocks, crypto, all of these assets, record home prices, is signs of a bubble?
Not even remotely close.
Not in any of them.
This is Michael Lee.
I could not be more bullish. So we just had massive fiscal stimulus, okay, in the big beautiful bill. Our budget deficit is shrinking dramatically, and I think the CBO again has never been accurate in forecasting anything. I mean, even a broken clock is right twice a day. So the biggest concern about our country is the debt. That's going away. Okay, we're having massive regulatory reform in the form of EPA with Lee Zeldin. You're going to do away with these climate change regulations. On top of that, interest rates a year from now will most likely be 150 to 200 basis points lower. You got a 0.0 month-over-month PPI print. So our inflation problem is gone. We have the largest technology trend, the fastest technology trend in artificial intelligence happening, and we're getting trillions of dollars of foreign investment in our country from an industrial production base. So we're going to have monetary stimulus, fiscal stimulus, unbelievable earnings power, and from historical trend standpoint, when you bounce like this off a low, these markets continue to go typically for another year to 2 years at 20, 30% rates. So I could not be more bullish. And there, in terms of housing, housing's so high because we have a supply problem that's not going away anytime soon. And as rates come down, and this problem in the banking industry, where if you look at where a 30-year fixed is and where a 10-year treasury is, that historical relationship should be about 175 basis points. That's floated between 250 and 275. If they can figure that out where it goes down to 175 basis points and the 10-year goes down to 375 or 350, and you
Yeah,
can get a 5% 30-year fixed, look out.
Yeah, Trump
the markets, they're
fixated on that.
Going way higher. So, like I said, I have never been this bullish in my entire career.
Jackie, that was a brilliant analysis, but he forgot to mention the big X factor, which is Sydney Sweeney.
Well,
Actually, that's Do you want there to be an intimidation thing going on? Is that good for what we're trying to do in the markets, or is it counterproductive?
Well, look, Trump gets a lot of criticism for breaking norms, but it's when we're in a situation right now and he's heavily criticizing Powell and he's so open and verbal about it, like you're in a bit of a situation where the emperor has no clothes when it comes to Jerome Powell. Like you have inflation trending at or below the Fed's 2% target, and we're still at 4.25 to 4.5. We are tighter now than we have been our entire time of this inflation supercycle, meaning the difference between where the Fed funds rate is and where inflation is trending is at the widest gap it's been. So why wouldn't you cut? If interest rates were 100 basis points lower, 3.25 to 325, it's easy for Jerome Powell to say, hey, I'm going to err on the side of caution. This was the worst inflation in 40 years. I'm sorry to the economy if I've got to be a little bit tight, but inflation's a bigger problem. We are nowhere near that. Core services, ex-housing, which is supposedly the special sauce or the secret number that Jerome Powell loves the most, is trending below 2%, according to the last month. So, like, I don't know what he's getting at other than being a hyper-partisan. And I think it was about 3.5 weeks ago, Bernie Moreno took him to task and said, hey, you can't comment on shutting down the economy. You can't comment on the largest peacetime deficits in a period of expansion in the history of our country. You can tell us we should forgive all sorts of student loan debt, right? But you're apolitical when it comes to talking about tariffs. And again, how many inflation prints have we had since he announced the tariffs? And this is why we're not raising? Like, it's a joke. And it's, you don't want to see our Federal Reserve come to this and be so blatantly political, but it is.
Dagan.
He is
and Hollywood, but that doesn't necessarily equate into winning elections. I kind of like to say, or where I worry about it a little bit, is money can buy votes, and we could be in a lot of trouble in that sense. But with that being said, Democrats, centrist Democrats and independents now have no home. So the more the Democrats follow these progressive far-left leaders who are raking in all this money, I think they will get wiped out in the midterms because the American people are not simply going to follow those types of leaders.
Jump in. Anybody?
Yeah, I'm a lot more nervous about the midterms because the Democrats have a structural advantage. So in 2022, the Republicans won the popular vote by 4%, and what we had 4 or 5 House seats. So if the Democrats, if they're even, Democrats and Republicans are even going into the midterms in the generic ballot, that's a huge Democrat majority, and a lot of that has to do with the ineffectiveness of Republicans in redistricting and the lack of intestinal fortitude to go out there and draw the maps the way the Democrats do to gerrymander their seats, plus counting illegal immigrants in the census. It's a high watermark, and these people that are getting pushed away from the Democratic Party when President Trump does what he did with the Epstein situation, okay, or bombs Iran, you alienate a lot of these tangentially involved Republican voters that were all in for Trump in this last election. Okay, so you have a Republican base, and you have these other people that are flirting with leaving the Democrats forever, that are independent-minded people that look at this Epstein situation as a distrust in government, and you protecting the powerful and the elite. If you're not going to, do everything you can to get all that information out there, these people just stay home, or they'll vote for a leftist candidate that says they're going to release it. You do push a lot of people away, but to get them to vote Republican, you need to kind of take charge of a lot of these issues, which is why having RFK, having Tulsi Gabbard as part of the administration was a huge part of the landslide victory President Trump had this last fall. So there's a lot of problems from a structural disadvantage that the Republicans have in the presidential election because the low propensity voters are now Republican and the Electoral College favors Republicans. It is the opposite in the midterms. The Democrats have the high propensity voters, and it's just a structural advantage.
Can I just on the progressive cash though?
We are looking at tech companies' earnings, the market, frothiness, bubbleiciousness, whatever you want to call it, or just extra bullishness. I see why Tesla's down. That makes sense. The stories all make sense given what the backdrop is right now.
Yeah, so something important we just crossed a turning point with Google's earnings last night. So the expectation was for $75 billion worth of capital expenditures over the next year. That's basically mean NVIDIA GPUs, right? They're going to put up some data centers. They're not really doing plant equipment. They're not using heavy machinery over there at Google. They're building up their AI war chest, right? And you need to do that with NVIDIA GPUs. They'll buy some from Broadcom. They'll buy some from Marvell. They'll buy some from AMD, but mostly NVIDIA. And every quarter that every one of these hyperscalers has come out and said, hey, I'm going to spend more on CapEx than the street expects, the stocks get hammered. Okay, well, look, Google stock is up right now. Okay, so to me, in my mind, the market's finally starting to get it, that there's a massive ROI to buying a NVIDIA GPU and renting it out to everybody and their brother that wants to build some sort of AI startup. And so Google's AI demand and their build out is so much, it's feeding into other companies like a CoreWeave, right? That has to go out and rent NVIDIA GPUs from CoreWeave because they can't handle their own process. And again, the next step of AI will be the AI agent. So a large language model can read a legal document and give you findings. The agent will be what takes it out and executes those legal findings across your enterprise. We are not even close to the beginning of the AI agent phase. Those use a lot more tokens than the large language model, which means this demand is about to jump up. And like all the inputs, so data. So if you look at data as a whole, we create and collect more data on a daily basis than we did from the beginning of the history of the time until the end of the year 2003. And that's going to increase like a hockey stick.
Yeah.
So all the inputs for all these are going to get more complex, and it's just going to get more and more and more and more. And like maybe in 5 or 6 years, we'll have infrastructure to handle that, but we are nowhere near now.
When we started our leaderboard competition, I did not specifically want to pick a big tech company because I was afraid to do it. They had moved so far. But then you flash